delving deeper into what the future holds for all of us and how to get ready for what's coming. I'm thrilled to have with us Vivek Kagzi, who is joining us all the way from New York City. Vivek is currently the managing director at Goldman Sachs. Previously, he was the director in Citi's Municipal Securities Division. He focuses on financing solutions for tax-exempt clients, renewable energy investments, and new product initiatives. Vivek has developed various products and structured financing for infrastructure projects. He holds a undergraduate degree, actually two undergraduate degrees, both in economics and computer science from the University of Pennsylvania, graduating from its very prestigious M&T program. Above and beyond his professional and education achievements, he's also father to two most adorable children. And he is also someone I have deep respect for, someone who I've grown up with, and someone who I know is my 4 a.m. friend and family. So thank you, Vivek, for your presence in my life. And thank you for doing this interview.
No worries at all. Literally grown up with.
All right. Okay. So Vivek, as we sort of set the context for this conversation, and we started writing a book about the future of work. So from your vantage point, from where you sit, looking at these deals, investing in these projects, why do you think about the future as an investor? Why do you keep your pulse on the future?
It's a good question. So, just to start off, obviously, everything that I express here, my own opinions, obviously nothing to do with my organization, but, really looking forward to this conversation. Thank you for inviting me here. Now, when you think about the future, I think almost all investing, when you think about it, is really about the future, right? Like, you see every standard investing disclaimer be about past results have no bearing on future performance. I mean, people are always investing with a look towards the future. What will be the next big trend? What will be, let's say, the profitability of a company in the future? Like, where do you see, the future growth of this company? So almost everything investing related has to be with an eye to the future. And then it becomes like, well, where do you see the trends, right? And there's micro trends, which are sort of more near term. And then there's macro thematics, which are much longer term. And so, the way generally investing works, especially among, let's say, alternatives, is people pick broader macro thematics and then dive deeper into those and figure out like which are the reasonable micro thematics to focus on in the near term, and then also think about medium and longer term investing. So, I sit in private equity, more in the growth equity space. So you can consider us to be sort of like medium to sort of slightly longer term investors. People who generally invest in the market are probably a little more on the nearer term, and then your venture, I would call it maybe much more longer term, with like a 10-year plus horizon on the ability of their company to generate like substantial investment returns. So when you think about it, almost everything is with an eye to the future, but it varies in terms of their duration.
Okay, cool. Okay, I think from an investor perspective, this profession is very much geared towards the future. Everything is about future return and trying to figure out what are sort of trends that are going to help your company grow, and then sort of the essence of the net present value is basically predicting future returns and then sort of bringing it back to the present. So I think in your career, very much keeping an eye on the future. You brought up, you're keeping an eye on micro and macro trends. So from where you sit today, let's start with the micro trends. What are you seeing and identifying as micro trends affecting the work you do? And then let's go from a micro to macro and sort of talk about the bigger picture. What are trends you guys are talking about and seeing?
Yeah, I mean, micro, the thing is, given that they're more shorter term in nature, they have the tendency to change from, call it, quarter to quarter, year to year. Like today, I would say, obviously, the interest rate environment is a big topic. When you think about inflation, you think about what the Fed is going to do, especially in the US, where I focus most of my investing activities. They had expected significantly more rate cuts. Inflation has been a persistent problem. That might not be as, aggressive in terms of rate cutting. So that's all. Interest rates almost always has a bearing in the micro. The geopolitical landscape is obviously something that is very focused on today, especially with what's going on broadly in the Middle East and in Europe as well. So that constantly has a bearing. And then, then there's knock-on effects, right? The issues in the Middle East has impacts on the price of oil, which then impacts the price of power, let's say, and therefore impacts, let's say, green energy, etc., which I focus on as well, right? So there's always something or the other. Typically, the big ones are inflation, interest rates, geopolitics, and then obviously the economy and the GDP and growth rates in general across the world.
Okay, and what's very interesting, it sounds like everything is very closely interlinked with a crazy domino effect. One thing happens and then it sort of spills through and then affects everything else you're doing.
it all has to be, otherwise it basically wouldn't have an impact, right? You wouldn't think about it as much if it didn't actually eventually filter through. So it's a typical butterfly effect. A butterfly flaps its wings in one corner of the world, like how does it impact the rain in California? It's standard, but obviously there's some things that matter more than the others.
Okay, cool. Okay, so interest rate and inflation, I feel like it's very cyclical. They keep changing, etc. But geopolitics, since you touched upon geopolitics, where are you seeing that in terms of uh, where do you see it seems like 40% of the world's population is going to the polls this year. So we're going to see sort of very dramatic shifts in governance, in policies, etc. How are you seeing geopolitics pan out? And since you touched upon that connection between, oil prices and then, how it affects the rate of power and therefore sustainability, can we go a little bit deeper into this? And if there is a perspective out there on how geopolitics are going to seep into sustainability and that connection, that's very interesting. If we could go a little bit deeper into that.
Sure. I mean, geopolitics, again, it again depends on which region of the world we're talking about and what its impact is. Obviously, the Middle East has a big impact on, let's say, on the price of oil, right? But these days, the world is actually much more interconnected too. So take COVID as an example, right? Like China shutting down, it disrupts every supply chain you can imagine, right? So it has a knock-on effect broadly because the world is much more interconnected. Manufacturing doesn't take place in the US as much anymore. It all happens in China. And then if supply trades or those are blocked, then that also has knock-on effects. So when, let's say, the volcano erupted in Iceland, it disrupts flight patterns, or if the Suez Canal is blocked, there's lots of interconnected aspects of it. So today I would say with potential for maybe escalation in the Middle East, that obviously has an impact on oil prices, and then that just broadly has an impact on everything, whether it's economy across the board. Like inflation is a big, gas prices or oil prices, a big part of inflation. Then the input costs of that into all the products that you produce, right? Petroleum is a big input into a lot of products that are produced, and therefore it has a knock-on effect. Then it impacts inflation, therefore then impacts interest rates, impacts growth rates, because so it's always all combined. And then there's always the regional geopolitics. So like take the US as an example again. Then, like you said, elections coming up in November here, and there's a big difference between priorities on one side versus the other, right? So if you take like sustainability, green energy, etc., it's a much bigger priority for Democrats than it's for Republicans. So depending on where the election ends up, you'll be probably in more favorable environment for one industry versus the other. Similarly for gas and fossil on the other side for Republicans. It's a prioritization thing, and that changes depending on where you stand on the geopolitical spectrum.
Okay, great. So I think you established the interconnectedness very well, and the examples are very beautifully illustrated. Where are you seeing this effect of geopolitics going in the next? It's difficult to predict 10, 20 years in the short term future. You touched upon, China used to be the manufacturing hub, but now with more protectionism coming through, most countries are trying to become independent manufacturing hubs. So are you seeing any sort of trends there? When you talked about oil prices, you said, you've seen this escalation of oil prices. Do you see that continuing? Like, what is your view on the future? It may or may not sort of pan out, but
obviously hard to predict the future. I wish I could. We'd be in a very different, position otherwise. Look, geopolitics, it is, it's out of, like, we don't know, right? We don't know what will happen with the war in the Middle East. We don't know what will happen with the war in Ukraine. What might come across after that. It's just a question of, ideally get to a point where the world is stable and, we get back to sort of operating under a much more stable environment broadly, which is generally good for the world. But when you mention supply chain, it has, if not the wars as much, COVID actually really showed how much supply chains are so dependent and don't exist in the US either, right? Manufacturing wise. So there's a couple of laws that have passed in the US recently, most notably the Inflation Reduction Act, which has talked about onshoring back and creating manufacturing jobs and creating manufacturing supply back. So it's really about securing the supply chain. So it's not only onshoring, but it's also creating multiple supply chains, so they're not dependent on any single one. So that's broadly been, companies' perspectives on trying to make sure they diversify their supply chain. Europe is obviously trying to become more energy independent. The war in Ukraine has showed them their dependence on Russia for gas, and so they are now shifting away and trying to be much more independent from an energy perspective. So that's been Europe's. The US has almost always been very independent, other than oil. It's actually one of the biggest producers of oil and gas, which is sort of like not something that people generally generally understand or recognize, just given that there's not as much focus on it. But yes, manufacturing is almost all. China has been basically the world's factory, and that is now starting to move away because people are realizing they need to have more resilient supply chains.
Okay, great. Okay, so let's link this back to what you actually do. You said that the US still is one of the largest producers of oil and gas. Where are you seeing now the shift to, let's take renewables to start with. What is going on globally in the renewable space? How much policy making is impact? How much is there a policy impetus towards renewables? How much is that policy supporting your work? Is this more consumer driven? Is it more supply driven, or is it more policy driven? In that triangle, how is the world shifting?
Yeah, it's a couple of different things. So obviously, renewable energy is definitely the way power needs to be provided in the future, right? Like, if we just can't keep burning oil and gas, the greenhouse effect is obvious, like global warming. It's just not something that we can continue to do, is just burn fossil fuels out of the ground. And that the world has generally accepted, right? Like, when you look at China with the wind farms and solar farms that they build, even in the US, and a lot of it, and Europe is finally catching up as well, right? So in general, it has to be driven by policy. What people forget is that the oil industry was heavily subsidized. And it probably still is, actually, when you think about it, right? So with almost any new industry that you want to build at scale, you do need governmental support. And that's what the Inflation Reduction Act that, the Biden administration passed a couple of years ago has had, like, a accelerant effect in the US, not only on broad deployment of wind and solar, but even more on manufacturing. And when you consider broader, newer technologies such as hydrogen or carbon capture, etc. So policy, I think, plays a large part in almost any new industry or any new technology which are trying to develop at scale. And I will say today, at least in the US especially, and I'll get to Europe too, but like the environment is really good for continuing to develop wind and solar energy as an example. But if you take a look actually at the cost curve, wind and solar has come down almost 60 to 90% in terms of the overall cost of energy relative to where they were even, like, call it 10, 15 years ago. So today, like for like, almost even without incentive, solar is actually probably cheaper to produce than almost any other form of energy. So that's just innovation, technology catching up, basically, with what has not been as, a much shorter life cycle for solar, let's say, versus oil and gas. So that continues to happen. Trends are continuing to grow. Battery storage is starting.
Cheapest from amongst the green energy pool, or compared to conventional fossil fuel?
Even compared to conventional.
Okay.
When you think about it, right, the marginal cost of solar is zero, right? Outside of some small operating costs, the energy from the sun is free, right? So you don't need natural gas input otherwise. So it really comes down to how much can you build it for and therefore its life, and then estimate the cost of that over its life. And therefore, so as the price of silicon, the price of panels has come down significantly, the cost of providing solar energy has actually dropped very, very rapidly. Like I said, almost 60 to 90% from like 15 years ago. So solar is very cost competitive today. Obviously, it needs some subsidies to keep it growing at the growth rates. It's talked about onshoring manufacturing, like I mentioned, but like it has really good policy support and continues to do so. And by the way, all of this is without a price on carbon. Right? When you think about it, right? Like if the world truly like wanted to reduce its carbon footprint, the way to do it is to put a price on carbon. I think at some point, if we can talk about what else we can do on policy, like that, people don't change their behavior unless it costs them to not do so, right? So not having a price on carbon, a broad price on carbon in the US especially, the incentive comes through these other aspects. So
do you see that happening, a carbon tax? Do you see that happening in the future?
Not in the US, not broadly. Just too much opposition politically for that to happen. Like there are some places where it exists, especially in the northwest of the US. Europe obviously has a carbon a cap and trade mechanism, but that would truly be the way. If you really wanted to reduce the amount of carbon that went in, you would actually put a price on what that implies in terms of the overall human cost, and then you would have a much more balanced view of like what one type of energy cost versus the other.
Okay, so you're saying it is very heavily policy dependent. In that triangle, it sounds like it's policy over consumer and supply.
It's both. So if given a choice, right, I think people would choose to use solar energy versus like call it conventional power, right? I don't think anyone would say, hey, I don't want that. It all comes down to then price, right? Like, are people willing to pay double? Probably not, right? So the question is like, what do you want to incentivize? And you, again, like going back to, it's not that the oil and gas industry has not been subsidized. It has been over the years because we've tried to make energy cheaper, right? And so all this is doing, in my opinion, at least, is catching up to that and making sure that they're playing on a level playing field. And today, because technology is caught up, on a marginal basis, solar is actually cheaper than most other fossil too. Obviously, we want to keep the momentum going, and that then is also offsetting for the fact that solar is cleaner than oil and gas in terms of the overall impact of the environment.
Okay, okay, terrific. Okay, you broadly you're investing in sort of emerging themes in sustainability broadly. Can you tell us a little bit just broadly what are these emerging themes? So of course, renewable energy is one track. What are the other tracks that you look at, and what is going on in this space?
Yeah, again, it's a very broad space, right? So there's no one like, magical sustainability like bucket. It's anything that we focus on environment in particular in terms of what I invest in. And so within that, thematics we consider broadly are clean energy, clean and sustainable transport, water and ecosystem services such as carbon capture, recyclables, the circular economy, and then food and agriculture as well. So that's broadly, the thematics we think of that covers the broad gamut. There are, the UN issued SDG guidelines, which also bucket the various sustainability focus areas according to the UN. So we keep that in mind as well with our focus areas.
Okay, terrific. There's in different conversations it's come out that sustainability itself is not sustainable because of the cost curve, and you touched upon the cost curve a little bit with solar. When we speak to people in manufacturing, I spoke to some interior designers, etc. It seems, and fashion designers, it seems like everyone wants to use sustainable materials, but they come at a premium. And the minute the consumer is faced with the decision of paying a 20% premium versus not,
Yep.
all his goodwill, etc., is just sort of out of the window, and they say, "Hey, we don't want this." So, are you seeing this cost curve change going forward? Like, how much technology advancement have we seen? Are there any examples you've seen in any of the investments you're making? Because obviously, when you're looking at investments, you're looking at the cost curves. So, is there anything happening in that space?
Yeah, no, I don't disagree with you. In fact, just going back to what we just talked about, like people don't change their behavior unless either they have a financial incentive to do so or like, it suits them better. In general, that is a human trait, right? So I don't disagree with you at all. Like we can't just say, hey, something sustainable is going to cost double and we're just going to do that. No, when we look at investments, we're trying to look for, I mean, the ideal investment for us, right, is one which is sustainable. It produces a product of the same quality or better. So there's no like drop off in efficiency or like usability of the product, but also then does it at the best cost or at least a comparable cost, if not better, right? So I will agree with you. You're not there yet, but that doesn't mean, we can't see a price trend towards getting there, right? So a lot of it comes from scale. Like, are you able to produce things at scale or not? And so there has to be some aspect of like, if you build it, will they come? Can you see the path? Can you see the path to like, reducing your cost overall such that you have a sustainable product that performs as well as the conventional product, and you can produce it at least the same cost, if not better. And then some of it then also comes down to like, yes, I agree with you, can't set a premium as a consumer or a business, but are there other incentives then government policy can help with to at least bridge that gap when technologies are currently nascent or products are nascent, need to get up to scale, and then at that point then it is much more usable and feasible.
Okay, it sounds like it circles largely back to policy making. It needs to be sort of deeply embedded. It's deeply embedded in policy, it looks like.
It almost has to be to begin with, right? When things at its nascency, like it almost always happens through policy, right? Like it's not like nuclear technology didn't happen with like significant government backing. Like they spent like billions of dollars developing the atomic bomb and then use that technology to create like nuclear plants. That's not something that private industry came up with, right?
Sure.
So it's broadly like what do we want for our countries, the world broadly, and if caring about the environment and fixing what we've done so far is a big piece of it, then as a society as a whole, we should be encouraging new technologies and like incentivizing the private sector to spend their own capital, spend their own both human capital as well as like, actual physical capital into saying, okay, we will try and develop these technologies to get to a point where a sustainable product is not only as good as the existing product, but also cost competitive. But I agree with you, it has to get to that point, but without, you can't just say like, we will always be at a premium.
Okay, okay. Also, you touched upon water as one of the areas that you look into. And water and food you talked about. So both these resources, in different conversations, I've had interviews where they said the problem is inflated. There really is no food and water crisis. There are conversations which say, hey, there's a massive food and water crunch coming up. What is happening from your lens? Is there a crisis? Will there be a crisis? Can the crisis be averted? Is it a supply chain crisis that there is abundance of these resources at the beginning of the supply chain, but then it gets lost along the way? What is going on?
Yeah, it's again really good questions. It all depends on, like, I think it comes from people's perspective, right? Where they are, right? What they've seen, what they haven't. When they say that, oh, this isn't a problem, but this is, right? It all comes down to like what you are familiar with. I said broadly, I would say that generally people seem to have access to water in most places, right? Like there is generally fresh water. The problem is the infrastructure doesn't exist to move that water or clean it or make sure that's being disposed of properly, right? So it's not just water, but it's also wastewater. So there's two aspects, right? There's delivering clean, fresh drinking and cooking water to people to use on a daily basis. And then there's also treating the wastewater that comes out of people's homes and making sure it's properly treated before it gets, released back into the environment to keep the environment clean. So I would generally argue that water has not been priced properly. Like people think water should be free. And, but it costs money for the infrastructure associated with water. Yes, you can pull water out of the ground using a well or otherwise, but, how do you make sure that water is being cleaned? How do you make sure it's being transported properly? How do you make sure the wastewater is being treated properly? So I think that mindset of like, what is the right price for water has to be established so that we can actually make sure we have good water outcomes for people. And that's a thematic that we focus on broadly within our space as well. So that's one.
You see that happening? You see a price for water getting established, at least in certain parts of the world, and
it has to, especially in the developing world, right? It almost has, like, the marginal cost of water is probably low, I would say, because using 10 gallons versus like 3 gallons probably doesn't have as much of an impact. It's almost though there's like a fixed cost of delivering that infrastructure that needs to be incorporated into people's like usage. So, and in fact, if anything, I think the one thing that goes against people trying to save water is that it's so cheap today that people don't think about it, right? That it doesn't cost you that much more to like, run your shower for 10 minutes versus like, 2, because the cost of water is so negligible. I think that, again, going back to the thematic that people need to only change their behavior when there's a cost to it. Like, I think that's part of that overall aspect. And then there are parts of the world where they're just, water deserts. Like it does exist. It is a problem in certain areas. I would say as manufacturing industrial capacity goes up, a lot of these newer industries are very water intensive, take semiconductors or otherwise, right? And so, being able to reuse and recycle that water is a big focus area as well. That we can't just keep using fresh water and putting out like, dirty brine into the environment. And then with food, I think it's more a question of like, one, keeping food waste to a minimum, right? So we want to make sure that the food that we do produce, I will agree, the productivity today of food across the world is probably its highest than it's ever been, right? There's no doubt about that. Like we are able to generally feed the world, and the population of the world has only gone up like 2-3 times over the last, call it, 50 to 100 years, right? So the world is very productive at making its food, but there's a lot of food waste that exists in the world. So we could do better about like using less land to produce that same amount of food, having lesser carbon emissions associated with making food, right? And so those are aspects of how to make things more sustainable. Is like, yes, we can keep cutting down rainforests to create more agricultural land, but is that sustainable for us longer term? And that probably is not the case.
Okay, so increasing efficiencies in food production. Okay, that sounds great. I want to talk a little bit about this world of sustainable investing. 20 years ago, these departments didn't exist in most private equity shops, in large corporations, in large investment management firms. There seems to be a thriving business around this. And I don't mean from just purely a commercial sense. I mean from a awareness perspective as well. There seems to be an awareness about this as a problem, and corporations have now started setting up these divisions. How big is investing in sustainability in the grand scheme of investing? Is this a very marginalized, sort of like, ignored division within these larger organizations, or are you seeing these becoming more and more prominent in the future? Is this a legitimate vertical within these organizations? And for somebody young is like, hey, I want to be part of this department, do you foresee this as sort of like a futuristic career path?
Yeah, I mean, again, given what I do, it's hard for me to say otherwise. But just broadly, when you think about it, right, like almost to over 2/3 of the Fortune 500 have climate-related goals, right? That's up from like 14% in 2018, right? So just think about the most recent trends, and even that's, companies are adapting and realizing that they need more climate-related focus just broadly in everything that they do across their supply chain as well as the products that they produce. Obviously the SEC is coming out with some climate-related disclosure as well. So again, broadly, the world is shifting to realize that they need to do more when it comes to climate, when it comes to the environment broadly, right? So specifically around private equity, that again has been a trend that has really started to establish itself much more so in, call it, the last 5 years. I would say 5 years ago, there were probably not that many funds, if at all, that were specifically pure play sustainability. There were obviously people focused on renewables. There were infrastructure funds that were looking at wind and solar as an example. But broadly, there wasn't just a broad, let's look at all companies and the sustainable thematics that I mentioned before. So that is changing. Clearly, there's a lot of capital now that's being allocated towards just those thematics as well. But again, going back to what I said, it can't just be sustainability for the sake of being sustainable, right? It has to be that you have to think about it in context of like, are we producing a product of the same quality? Are we producing something that can be, reasonably priced relative to the alternative? So if you keep all of that in mind, I think there will be significant growth in the sector, just broadly because most of the world will shift towards wanting a more sustainable solution. It's a question of like, can we get to that, and what is the time frame to do that? And with enough capital, with enough human resources behind it, I firmly believe we will get there.
Okay, fine. Okay, good. So you're a believer in the sector. You definitely see this as something that's going to become bigger and bigger as the world moves ahead. When you look at these sort of deals versus a non-sustainable deal, are you using the same metrics? Are you evaluating it just the way as you would any other deal, or is there a layer of sustainability? Is there a different lens to investing these sort of projects?
Yeah, I mean, again, being just more broadly thematic, I don't think it makes sense to not have the standard KPIs, the standard return metrics, because you're not going to attract the capital then if you're thinking of it as a subsidized, or like a, only impact focus thematic or an investment, right? You have to say like, look, we will produce the right returns, but we will also have this extra filter that we want to make sure that things that we're investing in are sustainable, right? So it has to be both. Investors are not looking, or LPs are not looking to subsidize one for the other. And so you have to sort of think of them together. Yes, we will get the returns, we will find the right companies, we will make the right investments, but we will also have a sustainability bent on it and make sure that everything that we do sort of is as of right sustainable. You could look at it and say like, yes, of course, that is making things better for the environment, or is a much more sustainable way of doing things. So think of it as like we have the entire universe available of opportunities that we can invest in, all meet the same criteria from a financial perspective, and then we filter for what qualifies as sustainable and what might not.
Okay, but when you take these projects to investors, are you able to justify similar returns to any other projects that might be non-sustainable? Is this at par with everything else?
I mean, again, it depends on the investment itself, but yeah, why wouldn't you, right? Like, I mean, your capital, everyone's money is the same shade of green, right? So it's a question of the risk that you're taking with an investment, and you're pricing your risk reward appropriately. So, just because someone makes a product that is more sustainable than not, it shouldn't change your risk requirement and the return requirement on that risk. Obviously, people will think that there should be a premium, let's say, to be paid for a sustainable investment because there are fewer of them around, and therefore, it adjusts in valuation, etc. But again, that's just everyone's own, investing methodology and what they're focused on or not. But I generally think the focus needs to be on returns as well.
Okay, fine. So you're trying to sort of maintain return parity whether it's sustainable or not. Okay.
100%. Again, I'm not saying that that's true necessarily of everyone. Like, the way I think about it, that's the only sustainable way of making sure there's like a pool of capital that's constantly backing the sector.
Okay. And when you look at these investors, um, is there any sort of government mandate, either in the US, or is there a firm mandate? Like when you look at these, I don't know, large pension funds or family-owned offices, is there a capital allocation by either design or by mandate saying, hey, 5% or 2% of our capital allocation needs to now flow through sustainable investing, and therefore you see that domino effect?
I think it's starting a little bit. Again, like you said, you probably put out the right numbers. It's small to start with, but again, it's part of their broader allocation, right? So if you think about, you mentioned pension funds, right? They typically are much more fixed income heavy, and then call it have it like somewhere between 25 to 40% of a private equity allocation, right? But within that, they be like, okay, you know what? Maybe some of it I'll focus on just sustainable investing. But at no point, to the earlier point I was making, does that sacrifice their
The
return requirement.
return. Mhm.
So their private equity bucket still needs to return their private equity returns. And then within that, they also allocate, right? Look, I'll be long international like corporates, or I'll be long, real estate in the US. So within those frameworks, yes, there might be sustainability as part of that overall allocation methodology, but it doesn't come, at least generally broadly across the LP base, not at a discount.
Okay, all right. Okay, let's switch gears a little bit to like just broadly the future of work. There's all this. Firstly, technology. You mentioned geopolitics. You of course touched upon sustainability, and another big emerging theme globally is of course technology and AI. How much tech and AI are you seeing come into the world of investing, broadly the field of investing? How much technology dependence have you seen? You've had a resplendent career for so many, almost 3 decades now. What are you seeing? How much AI and tech is coming into modeling? How much AI and tech do you see further coming into your workspace?
I mean, technology is always going to be existing, right? Like that will have its impact across the board, no matter what sector you're in, right? So whether it's in more better in software, on improving ways to produce or manufacture, like the technology will always exist, right? It's just a question of like what problem it's trying to solve. And I think of AI just as an extension of the normal technology development and technology maturation, right? And so I think AI will make certain aspects of the industry or various industries much more productive. I think the same way like computers change the way we interact, the way we produce, the way we think about or design. I think AI will have its role from that perspective, and it will just make us much more productive and probably expand, the ways we can.
Specifically in the field of investing, how are you seeing its implications and applications and usage?
I When you talk like how my work would be impacted by AI,
Yes, exactly.
I think that is probably a still to be determined aspect of it. I'm not sure that you can just I can just substitute like the work of an investor broadly, right? Because a lot of it comes down to like judgment, and a lot of in what I do and focus on, a lot of it is also like dealing and interacting with management teams, having a view on whether someone is a good manager or not. Also thinking about, I think AI will be helpful. Let's say when we're doing thematic research, or when we're trying to find, like, it'll make our research aspects of it probably a little easier, a little faster, a little more productive, right? So if I'm saying like, let's say I want to find a company in like the engineering design services space, and be like, rather than us like combing through a bunch of different research reports or trying to figure out where it is that we could argue, that maybe it makes our research more productive. But broadly in investing, a lot of it is judgment, a lot of it is like interacting with people, a lot of it is like getting a view of like markets going forward, like having a discussion broadly. And then what we do even after we make an investment is dealing with and helping the company build value on an ongoing basis. And with part of that, maybe embedding AI into some of their functionality, maybe, but and again, improving their software and technology usage. But a lot of it is also, let's say, for example, how do you deal with an HR issue? That's not something that you can just replace with AI, as an example.
Okay, but do you see like sounds like anyone like at a senior managerial level that's having to deal with human issues is not going to get displaced. But do you see sort of entry level analyst kind of jobs Do you foresee those at any point getting displaced, disrupted, moved around?
My general view is like technology displaces where something can be, let's say, lack of a better word, coded, or like it's just the rote, like, or the same function over and over again, right? I think that's where technology is probably best placed to like switch that around, right? For things that are much more programmatic, or like you're just taking something, it's formulaic even, right? That can be replaced with technology much more easier, and that is typically where there are also lots of productivity gains, because it's a lot of man hours for producing not that much increase in like output, right? So that's where I think you have the best impact of technology, whether it's AI or whether it's computers or otherwise. So I think that's where I think AI will benefit a lot. I think like the legal profession, right, will really benefit from AI, where you can produce something that would normally have taken a significant number of man hours, but much more quickly, because a lot of it is the same as on a repeat basis, as an example. Or maybe architectural design, things that are again like formulaic, they can be fed into anything that requires judgment.
In the
I think
world of finance, do you see the entry-level analyst jobs getting displaced?
I think some, maybe not generally. Again, like it's not easy for AI to like build a financial model, right? It requires an aspect of judgment. Can I give AI inputs and have them output a PowerPoint presentation? Yeah, maybe. Right? Maybe we'll get there. But like it's again, it's people are really worried that AI will just displace all jobs. I think there are some things that will get displaced much easier. But I think those are much more like
Are you seeing the usage of AI around you? Is it being used rampantly in and around finance firms generally in the New York area, or you don't see that much uptake?
I think there will be some. Again, I don't see it in my day to day. I'm sure there are other aspects within our organization and others in the finance field that see it much more so, especially, let's say, call it perhaps in the trading functions or some of the more operational functions that I had mentioned. So I think there will be more of it, and some people argue we've been using AI for a while anyway, right? So, and I'm sure that's true too. So I think it's just a function of like what level it can get to, and its productivity gains relative to what it implies otherwise.
Okay. And what about the workspace of finance? COVID happened, everyone moved to work from home. What are you seeing as sort of emerging trends in terms of workspaces? Do you foresee, as an investor working in a larger organization, do you foresee the office as an entity getting disrupted? Or do you think the office will remain as a prominent place where people come and share ideas and collaborate? What is going to happen to the workspace in terms of investing?
I can give you my opinion, also my preference. Actually, I think COVID's already disrupted it, right? Like like 3-4 years ago, like we probably when we having this interview over Zoom, right? This didn't exist to the extent it does today. It's just so widespread at this point that you don't even think about it. It's made things easier in a certain aspect. Like I don't have to travel all the time to go meet clients. Everyone's like understood that you can actually do an initial meeting over Zoom. It's not the end of the world, that this is acceptable as a form of communication. I think so. I view that as a big positive that's come out. Like video is actually probably a much better way to communicate than just a phone call, right? So if you think about it, meeting in person, video, phone, right? I would argue that's the best way to communicate with people broadly. Having said that, you know, a lot of work has already been disrupted because of COVID. People, like you said, there's a lot of shift towards home. I think it's good in certain aspects. It gives people a lot more flexibility with home life balance, because you just need it, right, in certain instances. And again, productivity tools like video conferencing, etc., have made that shift even more possible. And again, human minds do best in a crisis, and that's what's come out of it. I think broadly, though, I don't. While the trend has been to move away from actual office space and meeting the office and more towards remote work. You can see that in the commercial real estate industry, across the board here. I generally think that's not the best way for us to be productive on a long-term basis, right? There is some aspect that comes out of collaboration, being in an office together, that I think is very important. And I think across the board, whether it's in technology, whether it's in manufacturing, whether it's in design, whether it's in finance, right? There's collaboration produces creativity, which doesn't exist over a Zoom, or being people not being in the same room at the same time. So I don't think it needs to be one or the other. Like it's not doesn't have to be extremes, like it has to be work from home or it has to be all the time in the office. I think though with the leaning towards people at least meeting more often than not, with flexibility for people when they need it, and having the ability to make things more productive in terms of using technology tools like Zoom or otherwise to create that productivity. I think that would be the ideal place, but that's hopefully where we land.
Okay, so but it sounds like you're still leaning towards an office space. You like the office space. You're not seeing that getting disrupted.
It is my preference. So it's clearly been disrupted in technology, right? Like San
In the
Francisco.
world of finance and investing.
I generally think probably not. I mean, people are, I can't say that across the board. I've heard some people are fully remote even
Mm.
today.
Mm.
Or some people, some employees are fully remote. Again, I generally think finance at least is better off when people are in office together, because it creates the ability to collaborate and be creative, which would not exist if everyone was not in the same place at the same time.
Okay, let's move towards the last section of this interview, and then we'll start tapering down, which is in terms of education and skilling. You had the benefit of getting 2 degrees, one in economics and computer science. If you had to go back to either of these program directors and say, hey, now where I sit, and if I had to plan my career out for the next 20 years, if you were going to develop curriculum for either economics or computer science, what's missing in curriculum? What would you advocate in terms, because you hire these people now, right? So where are the colleges, and where are we going wrong in future skilling our workforce?
It's an interesting question, and especially when you put it in the context of like, what do I look for when we look to hire people? So, one of the biggest things I look for is basically intellectual curiosity, right? Like people wanting to read about what we work on, being curious, asking the next question, right? And so it's almost like a little bit more soft skills would be helpful broadly, right? So intellectual curiosity I mentioned, but even like how to deal with people, focus more on like the art of the negotiation, like how to be some more leadership training would also be helpful. Again, broadly, like more interactivity I think would be something I'd focus a little more on than, at least, and again, it's a long time since I've been at college, right? But things I'm sure have evolved since. But I would say rather than just be about teaching the text, but even like practical applications of it, and then also like how to deal with various different situations within a corporate workplace or otherwise, right? So, and then also fostering more creativity, or fostering more intellectual curiosity. I think that's where broadly tend to be the most successful people, is the ones that are more self-starters. They want to go and like drive things as opposed to just doing what people ask them to do, right? The ones that are most successful are like, okay, this is what I was asked to do. Now, what is the use of that? How do I apply? How's that going to be applied? What might be the next question? And by the way, what can I do to make this better? Right. So it's creating that sort of mentality. I think that could go a long way.
That could go a long way. Okay, great. Okay. So self-starters, curious people, people are willing to sort of take on challenges and sort of navigate ambiguity. Okay, as you sort of see the world of finance, and if you were to put out, anyone's best guess, but are you seeing any new careers within broad world of finance, not necessarily investing? If you see the overall gamut of finance, are you seeing any new careers come through, careers that didn't exist earlier, but you're seeing sort of a drive or push towards any career segments broadly you see coming through, on any career segments you see getting disrupted and getting moving out of the value chain?
When it comes to finance, I mean, like there's always think about all the financial companies that exist, right? There are some pretty standard uh, focus areas that all of them have. Investment banking is clearly like always and always will be like a stalwart when it comes to advisory or transaction advice. There'll always be the trading aspects of, whether it's fixed income or equities, like that will always exist across the board when it comes to finance. I think what you've seen recently is the more rise of alternatives, right? When it comes, and that's more on the investing side, but whether it's, used to be just private equity a few years ago, but private credit has now become a big part of the broader investing in alternatives franchise. So you're seeing a little shift of that away from banks that typically were the lenders towards more alternatives. So I think if you think about like how things may have developed, let's say over the last, over the decades since I've been out of college, like that didn't exist 20 years ago, right? And like it's a big field today, and I think that will continue to evolve. Like 20 years from now, you will say there'll be something else new in finance that people are much more focused on, right? So I would say today, relative to where we started, it used to be hedge funds, used to be the alternative to working in a bank. Today, there's also all the alternative capital firms, right, broadly that exist. So whether you call it Blackstone, KKR, Carlyle, us, to be honest. So that's really been the more of a shift, I would say, in finance. And I think that will continue to happen. And again, you'll see trends establish themselves where people are better providers, more efficient providers for that capital. And that will help.
When you're saying alternatives, you mean like these are sort of more boutique firms that are specialized in one specific area? Like you'd have a space investment thesis, and then this firm would run money that invests in, like, let's say, sort of the universe.
No, by alternatives, I mean private capital, right? Broadly, private capital, right? So private capital used to be associated with private equity. Like that was the only place where like private capital would exist, is like investing in companies to take them private away from the public markets. The public markets used to be the only way you could usually finance like a company eventually, right? That you would have to go public to raise capital. And we've seen that trend away. And, especially, I wouldn't necessarily even away, but like a definitely rise of private capital solutions. And then it used to just be equity, then it moved into real estate. Now it's very heavy in credit as well. So you have people that are putting out those capital allocations in private firms without necessarily having to hit the public markets to do that. And therefore, there's been a big increase in that, which allows for more creative solutions. It allows for, more people to get access to capital.
Okay. And in terms of the actual job functions, are you still seeing the same job functions over the next decade or so? Are you still going to have the analysts and the associates and the traders in the, is that ecosystem going to stay? Do you see new roles coming in? Do you see like the ethical officer coming in? Do you see the sustainability officer coming in? Like, what are some of the new things?
All of those still exist. I mean, like I said, investment banking, trading, those businesses are going to be around, and they will continue to be around. So my view is always, when people are like, oh, like, talk to me about your career journey, or like, what did you want to do, or like, why did you do what you're doing? I was like, and what should I do? I was like, you really should do what you're interested in, right? And the way I like to say is like, well, what do you like to read about when you go home at night, right? And if you don't want, you should do that. You should work on something that you're curious about, that you want to read about. And so, yes, there will always be, like any other company, there's a hierarchy, right? So you can call it in finance, analyst, associate, VP, director, MD. Like that's just a hierarchy that exists. But I don't think of that as a job description. It's like, what are you doing, right? Do you like the markets? Do you want to like trade in and out? Do you want to think about like the micro trends and what impact that might have, and do you like that in companies, do you like that in currencies, or do you like that in oil and gas, right? So that's one piece of it. Like your job description should be like, is that what you want to do in a fast playing environment? Do you want to provide transaction advice, or do you want to help companies think through strategy? That would put you on the banking side. Or then us, like, do you want to deploy capital? Do you want to
Or you don't see the hierarchies and the roles shifting in any dramatic way?
No, again, but that for me is a function of experience. It's not really anything else. It's like, how much experience do you have, and how you've been able to grow, and like, what value do you add, and that's where your title ends up being. That for me is not a job description as much as it is just your a level of your experience.
Okay, cool. All right, last question and we close this. There's a lot of anxiety in the system. People are talking about COVID happened, now AI is happening. People are saying we're going to lose all our jobs. There's this sort of gloomy scenario. And then there's a faction of people who think that, oh, AI is coming in, it's so exciting, productivity is going to boom. So much innovation, there's space exploration, there's this little boom scenario. So where are you on this boom gloom spectrum? Are you optimistic? Are you pessimistic? Is there a gloom boom scenario in your mind that sort of the best of the world and the worst of the world? Is there anything like that?
This is again going back to like, it just comes from experience. Like I've lived through, like when we were in college, right? Like the tech crash happened, and there was total gloom at that point in time. Like, oh, what's going to happen? Blah blah blah. It all recovered, only to hit with like the 2008 crisis. And again, there total gloom. Lots of companies went under, right? Again, world recovered. Then we hit COVID, right? And world recovered, right? Like the world will go through these cycles. There's no doubt about them. They will continue to happen. The more crises you see, the less worried you get about them, right? It's like, okay, we got through that, we'll get through this. And so today, I would say, actually say that the world is generally pretty well placed, outside of some of the geopolitical risks that exist today. Like, I actually think the more interconnected the world becomes, the more stable it is. We've lived in basically peacetime for like, the better part of 70, 80 years, right? And that the world has generally been much more productive. It's grown significantly. We will go through some cycles. Generally, where we are today, especially in the US, I think it feels pretty good. Inflation being a little persistent problem, but other than that, the economy is doing really well. Interest rates are generally like at the right place for like continued growth. And then across the world also, like, manufacturing is picking up again. Again, consumer sentiment, I generally think is fine. It's more, I think, personally, I think like the impact of media has been like more impactful on like people's like view of anxiety, or like the doom and gloom, which generally comes from media, because that's the stories that sell, and those things that people want to read. Like, but if you truly looked at the fundamentals, I think we're a pretty good place.
Okay, terrific. Okay, fundamentals seem well placed. The conversation was terrific. I think you really were able to outline a lot of detailing, really go deeper into the world of sustainable investing. And I want to see all your experience and expertise really shone through. So thank you so much. This has been a great conversation. I will be in touch and keep you posted on all our progress. But thank you for all your inputs, extremely valuable. Thank you so much.
Thank you. Thanks for having me.